Ladies and gentlemen, how we doing? Matthews here from M&M Forex Traders. I hope you're doing great. So just like always, I'm back again with another beautiful video for you guys. I hope you enjoy it. Let's get started. So I'm back here with a trade breakdown on Euro USD on the 50 minutes time frame. This was a very beautiful trade. And folks, unfortunately, full disclaimer, never took this trade, but I thought I'll actually share with you guys. So let's go. So right now, what we had is this, not this, right? We had what we had here. So what the market pushed it to the upside, creating this high here, and then created a low here, and then a higher high. Later on, we saw the market push it to the downside. So immediately, what you can see here is that the market created a QML here. So basically, what a QML can be, for example, in this case, we actually have what we call a dual resistance QML. So these are equal highs. So whenever you see equal highs, meaning you must be ready for price to take out those equal highs, right? Wait for price to actually take out the equal highs, right? So right here we had the QML, then this is the low, meaning that's the high, and this is the low, then the higher high right there. So this is the low. So according to how I analyze, this is I'll call this low and the break of structure. Okay, and after that, you look with you label your higher high right here, so higher high right there, and then you look for the lower low. So my lower low was right here. Okay, so that means my path is complete. Okay, what's the next thing? I'm going to look at how the market is coming to me. So I'll look at this level. You see that at this level we had a lot of rejections from this level. So I can just get my trend line and then label this. Okay, so I'm looking for areas where the market was rejected several times. So this is where the market was rejected several times right there. So I'll look for, so this is my R1, my first resistance. Remember, a resistance is not an exact price point, it's a zone as well. Okay, so this is R2 right there. So therefore, this is my liquidity zone. Liquidity zone. This is my liquidity zone right here. Okay, what's next? The next thing is to actually identify my type of demand zone. You can see from here, this is a rally, this is a base, and then that's a drop. So this is my rally base drop supply zone. Okay, so as you can see from this level, we had a nice entry right there. A sniper entry kind of a setup. The market literally just came to our zone and then dropped like that. So this is RBD, rally base drop supply zone. Nice setup. So let's increase the font on this one to this, and then you can reduce the font to this one, on this one right here, or something like this. Yeah. So yeah, so far looking very well. And then the next thing is just to wait for the confirmation. So if you look here, where the market breaking the structure right there, and then we had a nice rejection from this level right here, but a nice pin bar formation there. So you can see it. Let me try to zoom in a little bit so that you can appreciate. This was our entry right here. So this was going to be the entry right here. Okay, this is a nice pin bar right here. Yeah, this right here was a nice entry. Okay, see, that's our confirmation for entry, and then you just enter right there, and then our target was going to be, so let's just zoom out. My target is going to be on the next fresh demand zone. Okay, then my stop loss is going to be above that higher high right there, a few pips above the higher high, and then my target is going to be on the next fresh demand zone. Okay, So it's going to be on the next fresh demand. So you look to the left, until you find a reference point of where you would like to take profit. So let's go to the 30 minutes time frame. Let's see how it's looking there. So the most realistic target was going to be this level right here, that was going to be the most realistic target right there. Okay, of course you can see the market actually went all the way to the downside like that. So it's important for you to be able to actually extract as much profit as possible from a setup by utilizing trading stop loss. You can do that by literally utilizing the trading stop loss, because they allow you to extract as much as possible from the market. It's not about being greedy, it's about extracting the maximum potential from a trade setup. Okay, so this was a beautiful trade. This was an extremely beautiful trade. Yeah, so tell me what you think. Fortunately, we couldn't take this trade. We had pretty good winners last week. Unfortunately, we didn't actually take this particular one. Yeah, so that's what happened. Don't even beat yourself up. You won't be able to take all the trades, right? Yeah, unless you're going to be sitting on the charts like the whole day. You have things to do, right? So that's not the goal. The goal is to be able to create freedom that you can own your own time, right? So you'll be able to miss some of the setup and actually come back and actually look at them, and that's okay, provided you're taking good wins from the other side as well. All right. So you guys, make sure that you subscribe, like the video. I just thought that I would actually share with you guys this nice setup right here. So make sure that you do all that, like the video, comment in the comment section or what you think, and yeah, let's see what happens, right? So please make sure that you do your back testing, do your work, put in work, and everything else is going to take care of itself, right? So guys, until next time, goodbye.